big question for our time is, how do we balance our interests now versus our interests tomorrow? So that particularly matters, for example, if you think about pension funds. So if you have a pension fund at the moment, they're investing for people who are retiring into the world today. But the youngest member of a pension fund is retiring into the world in 2070. So what world are we investing into for them? And fiduciary duties really sit at the front line of what I would say the fault line of the question for capital markets is at the moment, which is, how do we balance these two things, particularly in a world where it's really clear from a climate perspective or a social sustainability perspective that there are balances and there are trade-offs that need to be drawn. So there's a very active debate around fiduciary duties at the moment of what the law says about them, how they're interpreted, and then how people behave. You can have a very philosophical debate about this, but let's just focus on the facts. At the moment, too little money is going into investments that support sustainability of the planet, social sustainability, and as a result of that, financial markets and economies are facing huge systemic risks. So separate of the debate that might exist around this, the actual facts on the ground show that we have something that needs addressing. What we're asking people to do is to think about long-term value creation and really get back to this idea of best interests. So with my pension, what is in my best interest? Is it only about short-term financial returns? Is it about a world that's worth retiring into? Now that's a lot for individual investors to balance, and that's why we and many others are saying, well, actually, how do we make sure that the rules of the road enable people to think of this way? There has been a lot of work out there, which we ourselves at the Institute have been involved in, that have clarified that fiduciary duties say that it is permissible to think about the longer term. Society is changing quite rapidly around us, and people's expectations are getting much more three-dimensional in terms of what their money ought to be doing for themselves, their families, and the world around them. And it's really about responding to that.